all price action is random. It's all random. Okay. Don't believe it's all random. Okay. I'm going to say it one more time. It's all random.
Scream it from the mountaintop.
Yeah. If you believe that you have this, yeah, but Rod, price stays 78% of the time within value area high and value. It's random. Every tick is random. The market participants, the algos, everything is, it's only going to get more random.
Hey everybody, and welcome to a new episode. Before we get started, make sure you show a little love. If you're on YouTube, subscribe to the channel and hit the thumbs up button. If you're on Apple Podcasts, make sure you leave us a review. Any other platform that you're on, whatever the love looks like, show a little, and then let's get started. How are you doing today?
I'm doing well. How are you?
Doing well. Thanks for asking. Looks like
who are
we repping here? The LA Dodgers?
Yes, that is it. It's the Dodgers. I split time between Vegas, where I've adopted the Knights because everyone had to, even though I'm a Kings fan as well, and Costa Rica and LA. So those are my hangouts. Oh,
interesting. So where are you right now?
Right now I'm in LA. Yep.
Okay. So and you live between those three places, you say?
Yeah, essentially.
Very, very interesting. And then what's up with Costa Rica? Just as like a vacation type place, or?
Yeah, I really fell in love with the country. It's kind of been overrun by gringos like myself, like everybody else. But yeah, down in Tamarindo, which is like a surf area. It's just, have you been to Costa Rica?
I've never been, but it's been on my radar, especially because of how time zone friendly it is.
It's time zone friendly. It's the best of all of Central America. They have this term called pura vida, means pure life. The people are just fantastic. So like Costa Rica and Southern Italy are my two favorite places on the planet.
Very well. I'll tell you what, right off the rip, I feel like I've already gotten some value out of talking with you. So it's just a really great start.
Yeah, good.
But I am glad that we're able to sit down and to do this. And I'll tell you, before, let's say my executive producer, but before Ruben reached out to you and set this up, I hadn't really heard much about you. And so I was excited to kind of dive in a little bit. And always excited just to sit down and have an actual conversation. So thanks for making the time. Thanks for being a part. And I guess by way of introduction, if I could just ask maybe some of the background on how long you've been involved in trading. Have you always been a futures fanatic? Were you a different market fanatic before that? Maybe take us up on that.
Yeah, so I've been in speculation and speculating in the markets for a long time. It's starting to finally show in the bags under my eyes. But I actually started professionally in the financial markets at Merrill Lynch in 1994. So way back in 1994, just a few years out of college. And I've really been trading and involved in the markets ever since. And I quickly found my way over to futures because I built a book of clients at Merrill Lynch when I was a young guy that were just more speculators. I was supposed to be selling municipal bonds to old ladies in Orange County and stuff like that. And instead, I just found some younger guys with some disposable income. So immediately got into trading OEX options and a few other things. And futures trading at Merrill Lynch was almost unheard of. I mean, it was just not really done. But we traded the big contract for a little while. And then in the fall of 1997, the E-mini contract was released right when there was an Asian currency crisis going on. So it was, a huge storm going on. But I've been trading futures really ever since. So given how highly levered they are and all the time I've been, I think we calculated the other day that I've traded more than 15 million contracts. So it's been a long time.
Yeah, for sure. Okay, so that's so interesting because in my perspective, the E-mini was just the product to trade coming in, and kind of seeing the evolution of the micro come out somewhat recently. It's an interesting transition, and it's interesting to talk to you who's been there since the big contract was the release of the E-mini, now the release of the micro. And I think from what I understand, there's even nano products out there. These things just keep getting smaller and smaller, don't they?
Yeah. Well, I think Forex and crypto have kind of continued to, move things to the right of the decimal point, right? So, yeah.
Now, do you think that the dropping it down to even let's say the micro contract, any downside as far as making products like this too accessible?
I don't think so. I mean, I kind of live two different worlds where I have some private clients and I have some friends and family money, and I'm no longer a CTA or a member of the NFA, but I did that for a while as well. But I still live in a world where I'm a portfolio manager. But on the training and education side, when it comes to the futures markets, I'm all micros now because I think they're the best way for people to learn how to properly manage highly levered products already. Now, whether we need to get even smaller, I don't think so. But the advantages of the micros are much more profound than just the fact that they're 1/10 the size. Because they're 1/10 the size, and people get really hung up on transaction costs associated with micros, and we can leave that aside. I don't think you when you need to make that transition, it's when you're position sizing anything greater than 3 to 5 micros, you're almost ready to move up to a full contract to save on transaction costs. But before then, it allows for all types of things that are not available to most traders, regardless of account size, which is scaling in, scaling out, building positions, campaigning around price, multi-market trading, stuff that's never talked about by any other educators, which is cross margining. I talk to hundreds of traders literally almost every month, and it's clear that so few have actually even really been in the markets while they say they have. They're really in this new world of futures prop trading and demo trading, which we'll probably talk more about, which I think is also very beneficial to a portion of the marketplace. So I don't think there's any downside to them other than the transaction costs are higher, but that is far outweighed by the benefits they provide.
Yeah, I would always agree with that as well, that when people complain about the transactions, the fees associated with it, the benefit or just almost the blessing of being able to be involved in a product like the S&P for that kind of risk exposure is really incredible. And I think paying the extra fees is just a part of that probably. Yeah. Now, if I could actually back that up just a minute, because from what I understand, when you say you're all in on micro, but then you also talk about scaling up, are you saying that somebody could kind of be profitable and start to make a living on the micro contract, or strictly just for transitioning into futures, and then the goal is always going to be graduate to let's say the E-mini?
It's a great question. I tried to shy away from this journey or path towards professional trading. I know you talk about it just because I try to set realistic expectations. And it's also from talking my own book, a guy that's been through this for 25 years. I know a popular poker movie is called Rounders. You ever seen Rounders?
No.
You got to see Rounders, man. It's a great poker. It's with Matt Damon. Rounders. It's called Rounders. Yeah. So, and you know, yeah, add it to the list. So it's, God, it must be 10, 15, 20 years old by now. But anyhow, and there's a lot of correlations or synergies between poker and, which is a game of skill and trading. The only reason I mention is because the lead character, without giving too much away, he's the young gun. He gets his face beat in. He loses his bankroll all the time. He's on that roller coaster of P&L. And then his mentor, this guy that he always borrowing money from, is this sort of tried and true guy who's been in the game playing smaller than his means for forever. So I kind of associate with that other character, and my job is to help these younger guns, or these people that haven't been through it, see really how it can be kind of on the other side. So when it comes to moving up in stakes, let's just call it, I really try to just back off on, instead of learning how to trade, you need to learn how to be a trader. And first thing is risk management. How many days in a row can you go without losing money? How many days in a row can you go literally just making $1? Silly things like that no one wants to pay attention to. Because really it's the foundation that's required. You can size up at any time. You can size up with a full, you can size up with more micros, you can trade more products. There's infinite ways to get bigger, but you earn that right by being a good risk manager first. And I fully do not believe that we need to be on this path that you sometimes hear from other recovery, where you first have to be face down in the gutter, totally broke, before you learn that's not the way that you advance. You know what I mean? It seems like everyone feels like they need to go through all this pain and account blowups in order to earn the right to be a pro.
Yeah.
Where I'm a partner in a company called Collective 2, where I've seen like thousands, 50,000 plus trading strategies and traders. And they all want to know how fast they can grow their business. That's the only question they ever ask. And I always say, hey, how about you tell me how long you think you could be on this platform building a track record? 3 months, 6 months, a year? Can you commit to building a track record on my platform for a year? And then after that, we'll have a conversation about how much money I can invest in you, or how many investors I can put onto your trading strategy. So that was a long-winded way of saying I think it's a good question, but it's a question more about how quickly you can hone your skills and become a good risk manager.
And so maybe going that a step further with that, because I think one thing that, from my journey into this, coming strictly retail, no background in this, no professional environment to kind of help me understand some of the basic things I was missing for a long time. Yeah. And even the idea, I think, of what exactly is a track record, or how long would you be able to be profitable to actually understand that, okay, I've earned some confidence here. And I think that from starting off, it's easy if you put together like a week or even sometimes a few days in a row to feel like, oh, I've got this, or it tends, I think, to a lot of false confidence, which then ends up in either over trading or being too predictive in your actions instead of listening more to what's actually happening. So from your perspective, I think this is just nice to hear. What would you say is, okay, like a proper, not even maybe like where you should be recruiting capital, but just like your own personal confidence where you've actually earned some confidence? What would you say would be like a streak of profitability timeline wise that would be like a minimum for you?
Well, without getting into the structure that I think the online futures funding prop programs provide, which is a natural, there's ones called Earn to Trade and some others that provide an actual trader career path that you can just sort of follow. And I think that's a good place to start if people don't want to build their own. We do little challenges in our group from time to time, partially because I have some concern that some of these programs might be regulated out of business, or there might be some problems with them. So people need to understand how to self-fund themselves and things like that. So to put some structure around it, we do these little challenges where it's 750, and can you triple it in a quarter before you lose it? You don't want to lose it all. And it's only $750. And so of course that's not suitable to trading any bigger products, right? In fact, in those programs, I only allow 3 micros max. And most of the traders, I say they have to do it with the Dow, which is even ridiculously small and slower moving, right? So they only have a $1.50 per point exposure to the market at any point. And the reason that I think those are a good place to start is because, first of all, the money's real, and you're starting to manage things more appropriately for a levered product. Here's why. You can't trade a $750 account and say you're risking 1% or 2% per trade. This nonsense that's taught all the time. So, and only say I'm irreverent, right? I say nonsense in the context of, it's not nonsense if your account's big enough or if you're properly capitalized, but anyone who has access to that much capital probably has a lot more experience in the instrument they're trading anyway. So if you're just starting out with 750, you cannot possibly be risking 1 or 2% per trade, right? So you now have to have high probability entries and campaign around it. So can you triple that in a quarter? And I use a quarter, not the next day, not YOLOing it, because there's no way you could triple it the next day with that amount of size, unless you caught some 2,000 point run during a day. So, and not many people stick with it. Not many people can do it. It bores the heck out of a lot of my traders, and I don't get many that commit to it. But I have some really exciting, unbelievable success stories about people that started with me back in 2019 and stuck with those challenges and learned how to consistently not only not lose the 750, but sometimes max drawdown would be maybe 10, 20, 30%. So maybe a few $100s. And they would triple it every quarter. They did it for a year. And I have a few folks now that do 60,000 a week. A week. But that's because they invested the 2 or 3 years it took to hone that skill. In other words, you can never trade a big account if you haven't learned how to properly protect a small account. So
beautiful.
That would be kind of my path, and what I would say to people is, can you start small and put up really, really great risk adjusted returns over longer periods of time than most people want to invest.
Yeah, I feel like there's almost like a direct correlation between I'll say like the financial literacy or honestly the wealth of somebody and the time horizon that they look at. And a lot of people who need that money, they're really looking at what can they do instantly with their accounts. And people that are a little bit more settled, they have more means, like they're much more interested in a more zoomed out approach. And even the idea of, when it comes down to separating out people who make more money or people that are able to achieve in any field, I think a foundational thing is they just think differently about stuff, and kind of getting away from some of the thoughts that you have, expanding that out is, I think, an important part of the journey. Because you gotta, if you're always zoomed in, things just get really, really messy. Okay, cool. So thanks for explaining all that. Now, I know you are a big fan, I guess, from your channel, of online prop funded accounts, or prop firms, should I say? where you'll put up a small amount so that you have, I guess, some risk in the game. They'll have some parameters that you stick within. If you pass their testing, you then get to trade their capital. There's a profit split involved. So kind of what turned you on to that, or what's your, take on that? Because I know a lot of people have maybe a strong opinion one way or the other about it. And from what I can tell, you're a big fan.
Yeah. So, and only now because of the micro. So it's all changed in the last 2 to 3 years, right? Because the original, the prop trading has been around for a long, long time. Retail prop really on the futures side started with Top Step in 2013, right? They basically started the category, and they were the only one in the category for a good period of time. And then 2019 with the launch of the micros, and then when the pandemic hit, we saw an explosion. So there's a lot more, it's a very crowded space now. So that's the first thing, is that it's really grown from 1 or 2 players to multiple players, which is a consideration that I think people should know about. The reason I'm a fan of them is because I've just been doing this for a very, very long time. I built 7-figure training and education sites in FX. I built them in stocks and options. I built them in futures. And everyone lost money in every asset class, but they lost it the fastest in the futures markets. Just got obliterated, right? And at some point, you need to offer the market something that has a potential to help more people than it hurts. Not that I'm saying that people like you and myself and anyone else who is doing our best to show people the ropes from the charts on out into what it takes if you're really serious about doing this. Unfortunately, there's just a vast majority of people that will fail or not do what they need to do to be successful. So these programs are not perfect, but they offer opportunity for the folks that are going to abuse them and have little success live or otherwise to lose less money and before they leave the business. And for the select few that do the things correctly, like I mentioned, some of my, I don't call them students or clients, I call them collaborators. I mean, I have some stuff that I can't share publicly that's literally astounding, where we're talking about people that have a cost basis in these programs of several $100s. When you say risk, there's no risk. They're just buying a product. They're just buying a subscription, right? There's no skin in the game at all, right. Which is one of the things that's not beneficial about these. But anyway, we're talking about people have parlayed a return on investment that is bonkers, like beyond bonkers. Now, is that a 1 or 2 or 3% of the market participants? Maybe, but it's certainly an opportunity that would have never existed for those traders without these programs. So that's why I'm a fan of them. The vast majority of people that are not going to invest the time and effort to develop their skills will lose less money than they will in live markets. And the very small percentage that will succeed will have access to far more capital and rapid growth than they would on their own.
Yeah,
that's my take on the programs.
Yeah. And even to the point, I think having skin in the game or risk is really a subjective thing. And I think for a lot of people, even if they're starting off with nothing, having their skin in the game be that fee for the combine might even be like a little enough to where the risk reward is not so much dollars, but it is risking the amount you put up rewarded for a funded account. So it's still kind of that element there. And then if they, like to your point, if they do a bunch of damage, they're just out what they put in, which is a really nice feature. So, okay, I feel like you've had a lot of experience either checking into online prop firms or even going through them yourself. What's the best one online today?
Yeah, it's funny. I just did an interview earlier with somebody else. People are reaching out and we're creating this kind of content, which is great, by the way. I think we need to do more of it because obviously our space, our corner of the world compared to other asset classes needs more exposure, right? I love when we have the I don't know, the leprechaun bearded wonder of the world who's got 1 million subscribers and half of his content is on how to avoid pattern day trader requirements. Well, how about you just don't have pattern day trader requirements and come over to the futures markets? So I can't exactly answer that because anyone can go to my channel, Futures Fanatic, and what I can tell you is that I do significant due diligence on all these firms before I create any content about them, right? There's always the trolls that believe that I'm just in this to get the affiliate commissions and things like that. Yes, I'm now paid handsomely because unfortunately most traders treat it like gambling. So there's quite a bit of transaction revenue that is generated for me for promoting these programs. I'm very forthright about that, but I don't care and I don't need it. I really do make the vast majority of my money from the markets, but neither of those things matter. So what I can say is I do the due diligence on all these firms. Anyone that you see mentioned on my community tab or my channel, they're all good. They're all vetted in the sense that I've gone through the program. I've been funded. I've received a payout. I've met the founders virtually or in person. I'm an investor in a few of these firms that I can't disclose publicly. I'm also a partner investor in Collective 2, which is the largest online marketplace for automated trading strategies and things like that. So I have a lot of experience. So anything I put my name behind, you can't go wrong with any of them. So that's any of the ones that are on my site. If you wanted some names, Top Step is fine, but I think they've fallen behind. It's Apex Trader Funding, UProfit, Elite Trader Funding. Earn to Trade has a great program called the Trader Accelerated Program, where you're not stuck with the original account size that you start with. So it's a true trader career path. You start on a small account, you pass, you create some profit, they give you a bigger account, then they give you a bigger account. So it's a real true trader career path. So that's a good one to look into as well. Plus many others that I'll be bringing some more promotion to going forward, because the space is getting crowded in a good way. There's people that are really innovating in good ways.
Awesome. Wow, that is very, very cool. Okay, so that's I think really helpful. So above maybe the best one or ones to avoid, Futures Fanatic, you can check it out in the community tab if you're interested in going down that road, for sure.
Yeah. So now, a good, real quick on that, Aaron, would be if someone, I get a lot of like, what do you think of this? What do you think of that? What do you think of that? So my answer to that is, if you do not see content on my site about said firm, that means I don't support them. I know about all of them. So does that make sense? So if I create any content about them, then they're worth your time and money. But if I don't create content on them, then the answer is, at this point, I can't recommend them.
Sure. And I was going to follow up. One of my follow-up questions was going to be any ones to avoid, and then it kind of answered itself to where if you're not talking about it, just avoid it.
Yep. Sure. Yeah. I don't do negative reviews. There's no reason to put that in the world. I don't think it's necessary. So
very good. Okay. Now, walk me through this, because something I would love to ask you is, it seems like you have quite a few different products that you trade. Could you give me kind of like a ballpark on like how many products do you monitor, or will you actively trade?
So again, there's kind of two worlds that I live in. So with my trading group and some of my trading and education, it's stock index micros only. So the four major ones. For beginners, anyone struggling, anyone having issues, they are in Dow hell, they call it. They have to stay on the MYM. They do not get to complain about getting close to their drawdown or having bad day or whatever when the Nasdaq's acting like a drunk monkey, which it does all day long. So myself, I look at about 20 different markets, but that's me, and that's not really my public persona for futures. So what I say is, it's essentially the four stock index micros. Then it's the ZN and the ZB, which are much bigger products. Obviously, there are smaller micro interest rate products, as I'm sure. And then we look at MCL and MGC, which is micro gold, micro crude, and that's about it. So we keep it to that. No grains, no currencies, no other metals, nothing like that. So it's pretty much the stock index futures is our bread and butter.
Okay, and how, if you could maybe speak into this a little bit, because do you have the same trade setups, the same trade ideas that you'll apply to these different markets, just kind of like universally?
Yeah, so that's a great question. So it's no additional work really, because the framework that I use can be applied to all these different markets. There are slight differences in terms of the pit times and the open times and things like that. Some will be active in more different time periods, right? So time of day is a consideration, but similar to you, I mean, I'm essentially a volume profile guy for the most part. We also use VWAP and some volatility bands. But what I always talk about is trading is really just two things. It's risk management. That's number one. You need to learn to be a trader before you concern all your time with trading. So it's risk management, and it's high probability entries. And the high probability entries can be found in any market using a similar framework. So I apply the same thing to all the different instruments that we take a look at. And then we just make slight considerations, again, for time of day and for other time periods in which there might be, what's the best way to describe this? Little glitches in the matrix that are not, they don't last long enough to be too concerned to recalibrate an entire trading strategy. Just like, for instance, the bond market now, right? The bond market has put a lot of people to sleep for a while, but not anymore, right? So now you have, it's interesting that you're so hyper-focused on my little mentor thing on the ES, like you need to get the ZN on the other side. Like all big S&P traders trade the ZN as well. It's the two worlds, the most liquid markets. I'm not telling you how to trade. I'm just saying
No,
When you
no,
look at
it's
the S,
following
you got
on.
to look at the ZN, right? You just have to, because they drive each other, and they're not inversely correlated anymore, right? We're correlating down to a market of one. So anyway, long-winded way of saying that yes, multiple markets, but the same approach to everything, so that you're not doing this nonsense that our unfortunate stock trading brethren have to do, which is look at a watch list and figure out the news on every instrument every day and waste half their time figuring out what to trade because of how it's going to act that day, you know?
Right on. Okay, maybe with that similar even thought, I thank you for the recommendation, because I'll do the same thing. Like what I'm doing, hyper focus on the S&P. There's no, it's not really like a tip or a trick or a secret that just works on the S&P at all. But what would your advice be for making up for the differences on the actual execution side? Because I think, like, if you zoomed it out a little bit, looking at the moves of what is likely to happen, or where the market is likely to fill in, or where it's rejecting, or something along those lines. A same trade setup or a trade idea that worked in the S&P would work on crude or the Russell or anything virtually. But when it comes down to actually pulling the trigger and position sizing that, there would have to be some real differences there. Or just in, for instance, an entry and a hold or some type of management on the S&P would be very different from something like on the crude oil. Do you have a different type of management or execution for each of these products, or how do you go about that?
Yeah, good question. So everything that I talk about with anybody that is interested in learning more about developing as a speculator is, I use this term that I think I invented, but something tells me I stole it, but I think I invented it because I was in sales for, when you're in financial services at Merrill Lynch, you're basically just a salesperson, right? So I've been in sales for a long time in addition to the financial markets. So it's a term I use called situational fluency, right? And it's a way better way of describing what we do than it depends, right? Because the answer to your question is like, it depends, right? But it depends doesn't help anybody. So I use the term situational fluency. You're looking to become, and other people talk about it as market context or flow state or things like this. But what I mean by situational fluency is the answer to how to size and manage an entry on one instrument versus the other is actually no different. It's just the same checklist that you're applying according to situational fluency. So here's the checklist. How much risk budget do you have at the time that entry is present, right? Because you're starting everything thinking risk first. That's all that matters. You're a risk manager. You're not trying to perfectly execute your strategy. You can't predict any tick because let me say this to your group, all price action is random. It's all random. Okay. Don't believe it's all random. Okay. I'm going to say it one more time. It's all random.
Scream it from the mountaintop.
Yeah. If you believe that you have this, yeah, but Rod, price stays 78% of the time within value area high and value. It's random. Every tick is random. The market participants, the algos, everything is it's only going to get more random. So in fact, it's so random that the biggest hedge funds in the world these days can't even figure out how to produce the randomness of the markets. They're like predicting distances between the stars to try to generate their random number generators. And these are guys who are way smarter than me that are like, we can't even figure out how to create anything as random as the market is. So anyhow, when it comes to those kinds of things, the first thing is, what's your risk budget? How much risk budget do you have? Because that depends on how you size an instrument that has more volatility than the other. The next thing is, what is the ATR of that instrument? So there are four things in trading, everybody. Risk management, high probability entries, okay? If you do not have a strategy with high probability entries that you've walked forward, tested, you will go broke emotionally before anything else. Okay. Do not believe this nonsense that you can trade a strategy that has a 30% win rate. No, you can't. No one can emotionally deal with that. Okay. So risk management, high probability entries, volatility, and volume. That's it. If you have a trading strategy that does not account for volatility and volume, you don't have a trading strategy. You have no edge. It's all random anyway. So crude oil versus the S&P. What's my risk budget? How much risk budget do I have on the day? Am I up? Am I down? Have I not placed a trade yet? Because that's an actual consideration to how I size it, right? Because the entry is random. Again, it's a high probability entry, but the result of that is random, okay? So this will be a crazy thing. I've traded for 26 years, millions and millions and millions and millions and millions of contracts without a stop, okay? I'm a risk manager. Of course I take stops. Of course I manage the risk, but I don't enter with any kind of pseudo risk reward ratio that's just in my head. That's basically nonsense. Like, this will be my target and this is where my stop is. That makes a lot of traders feel good. It's all nonsense. So do you do everything within the context of the situation? So the situation dictates everything you do on every decision you make. So the reason I mention poker a lot is because the most elite poker players, the most elite chess players, the most elite players in any game, that's all we're doing is playing a game, are thinking ahead of what their competition is going to do, how they're going to play out the entire thing. So if you're going to get involved in a hand, if you're playing poker, it sounds like you don't play poker, but if you're going to get involved in a hand against a very other talented player, before you even think about how that hand plays out, you have to understand, what's my chip size? How is that player running? What's going on? So it's all about situational fluency. And then you can do all this stuff before you're ever concerned with the chart or the instrument or anything like that. What's my risk? Is it a high probability entry? And then everything from then on just goes back to number one, as Warren Buffett said, 2 rules of trading: don't lose money. Refer back to rule number 1.
Awesome. No, I really appreciate you breaking that down. And I think that it's something that kind of caps me. I shouldn't say caps, because I think there's a lot of wisdom in focusing very narrow on something, at least until a point, and then maybe broadening out from there. And I think some of my ultra specific thing, and I think I do have just some edge of watching the S&P for so long, and my feel for entering in on that is something that kind of goes away when I look at something that I'm not as familiar with.
Oh, sure.
But the idea of potentially just zooming out a little bit and not keeping things maybe as tight as I have them on the S&P, because I feel very comfortable keeping things very tight as far as risk goes there, just because I feel like I have a very good feel for it, which I would just get chopped out in other things. But those are great words. And I appreciate a couple of things you said there. One, that and this needs to be clarified, but you don't trade with a stop, and not the idea that you don't have risk or that you just let things go, or that but the idea of having this preconceived risk to reward, that I know I'm getting this much risk to reward on every trade. It's something that I've felt, I remember in the early days, that was just kind of broken. And I felt like I was kind of crazy for thinking differently. And it was really helpful to me some of the first times I could look up to people and hear them say, and understand that I don't think any professional trader walks into a trade thinking that I'm going to be getting 1 to 5 risk to reward on this trade, and that's how they're positioned it. But because we can do better, and it requires us to be able to be more responsive and to actually have some decision-making faculties into what is the context or what is the situation I'm in right now, and not trying to cookie cut that into any situation that we find ourselves in.
I've taken off the kid gloves a lot. I mean, again, I don't do negative reviews, and there's no point in doing that. So I don't ever call anybody out for saying or doing or teaching or showing anything that I think is, that I just know is incorrect in terms of being able to progress as a trader. But unfortunately, if it's 90-95% fail, it's also because like 99% of all of it is all garbage in terms of it's just not how it really works. Right. And all of that, what it does is it even teaches people to feel worse about their inability to advance in a speculative endeavor. Right. Because they're told, well, the reason you're not being successful is because you're not letting things go to target, or you're not doing this, or you're not doing that. And that's not really how it works. So yeah, the true professionals that really earn their living from the markets do one of a variety of things, but they all have certain things in common. And you, of course, have one of those things in common. You're just hyper focused on a particular instrument that works for you. By the way, if it's not broke, you don't need to fix it, right? When you finally gotten there, everyone's journey is going to be a little bit different. But a lot of the foundational stuff that's just trading gospel that you hear is just, it's not only incorrect, it's toxic, unfortunately.
Yeah, I fully agree.
Yeah.
Okay. Something I think everybody would be interested in hearing, could you just kind of walk us through and I'll say in 2 parts, what a normal like Monday through Friday trading day looks like, and then maybe what the weekend looks like for you, kind of how much time you're putting on the screens, or just like what a normal day looks like.
Sure. So I have a trade room that I run. So that's the foundation of the day. It's called the Pro Trading Room, the TDG Pro Trading Room. And it's from about 15 minutes prior to the cash open to about 8 o'clock. That's Pacific Standard Time, right? So my day starts at about 5 a.m. East Pacific, and it doesn't involve the charts at all. So I have a whole practice that I go through: breathing practice, meditation, walk, hydration, all kinds of stuff. And then I really don't have to drop into the chart until about half hour before the market opens, because partially because I've just been doing this for so long, but I've also am teaching and training and showing just two trading styles that don't require a lot of pre-planning of prep work or all this kind of stuff, right? We can essentially look at 4 or 5 different things and we can be oriented and pretty well ready to go. And it's not just show up and throw up. A lot of people see my pre-market routine and feel like I'm not spending as much time teaching people how to plan out everything. Again, plan your trade, plan a trade. That's the Tyson thing, right? Yeah, that works great until you get hit in the face, right? So all this trade planning and stuff that you hear of, again, nothing wrong with it. I just think it doesn't serve people in the ways in which people intend it to. So so that's about it. Then we trade for about 45 minutes to an hour, sometimes a little longer. The goal is to make sure that everyone has no large red days. We do 3 things. G is a big green day. Small G is a small green day. Big R is a big R day, and small R day. And that's just in the 45 minutes. And we try to string together as long as we can of seeing no big R's. In fact, I'd like to see more small R's. Small R's are better than big G's because big G's generally mean people are over levered. So anyway, got the trade room then. And then I pretty much turn on my automated models and spend about 3 or 4 hours just completely away from the screen. Then I'll come back and watch the close, the cash close for the stock indices. And that's about it. I don't look at the charts at all on the weekends anymore, at all. Sunday evening, I'll take a look when the markets reopen. That's the one thing that sucks about there's a lot of things that suck about being on the West Coast, right? Is it's early mornings and then you got a 3 o'clock Sunday afternoon open, which sucks. It's cutting into a lot of your day on a Sunday. But yeah, I've been doing this for so long that the futures, while a big part of what I teach and train on, is just a small part of my overall business and education. I'm invested in a lot of companies and I serve on boards and do shit like that. So lots of stuff away from the charts.
Very good. Okay.
Yeah.
And then what about I didn't hear anything. Do you do like an after trading debrief, something like that?
No, I don't do a debrief, create much content anymore on my progress or my moving through a new prop program or anything like that. So no, not a whole lot of post things because the stuff that I do it's a lot more geared towards, again, just making sure that people protect their account and their risk. And we don't get down to the trade level detail all that much. Just because I spent 10 years and invested in all these online trade journals. I was a co-founder of one of the popular ones that's still out there. I just can't get anyone to do it. And I've just given up. So it's such a small part of people that are that committed. And I've also found on the tail end that we've now had tremendous success with a lot of folks that they know their stats and they do both quantitative and qualitative after trading analysis, which is important, right? I think the qualitative can be more important sometimes than the quantitative. But overall, I have not been able to tie the two together. And I preached it for almost 10 years, meaning that if you don't do this, if you don't journal, if you don't look at all of your stats, if you don't do a trade review once a week with me, you're not going to have success. And there's more students that prove me wrong than have proved me right.
Wow.
Does that make sense? So
yeah, no, it's fascinating to hear.
Yeah. And I'm not saying it's for everybody. It's just that I prefer, if we do any kind of review of any kind, it's only on the anatomy of a large, unprofitable, mismanaged position. That's the only thing I want to talk to anybody about, or I want to see journaled or talk about. But we don't review all the other stuff that much.
Yeah, no, very, very, very interesting. Now, do you think, as far as, let's say somebody coming up, do you think during the weekends it's a nice idea to kind of take some time away from the screens and kind of refresh a little bit? Or do you think there's more wisdom in going through a season of your life where you just are fully zone everything out and just commit to, bettering yourself, your strategy, learning more?
Good question. I don't think there's a right or wrong answer to that. It's going to be really dependent on the individual and how much time they have to invest. Like what I'll say a lot is we have a Discord, private Discord for all of our members. And we're finally to the point where a lot of the interactions doesn't involve me, which is great because it's actually people on different paths in their journey answering the question instead of me, right? Because obviously I'm only me, so I can only answer the questions you're giving me through my lens, which is, for me, I don't need to spend any time on the weekends anymore. But again, I'm at a much different level than a lot of people, where they might get better advice or better insight from someone that's closer to where they are in the journey, where that does make sense to put in some time. I would say though, that if you are able to watch the cash market open, if you're a stock index trader like you and I are, where I think you really have to trade that opening 90 minutes or be in front of the screen as much as you can. If you're not able to do that, you can choose a different market, different time. But if you can do that for 3 to 5 days a week, that's enough time, in my opinion, at least for what I do and for the stuff that I do. And your time is better spent reviewing the sessions. We record all of our sessions. So review the sessions, see how you did relative to some of the positions that I'm in. Again, I don't call out positions constantly, and my P&L is meaningless. I often joke with folks. I say, if I traded this small and did exactly what I'm showing you could do every day, I would never lose money ever in 90 minutes. I could do it every single day. I'd never lose ever. And that's just because they're high probability entries and I'm ridiculously sized small, like ridiculous. There's times where I'm trading a $300,000 funded prop account and I have 3 micros on max exposure for the whole day. That's it. And I make $131, or I'm down $42 at one point. So it's just a different thing. But then I'll flip over to, you asked a question earlier about, could you earn a living with micros? I flip over to an account that I trade only micros, and I don't know, 6,000 to 8,000 per month consistently. And we're talking about risk adjusted returns that are only possible with micros. You could not size this properly with a full contract. So do you need to spend more time than you do during your trading day? I guess that really depends on how much time you have to watch and invest in the actual trading day that you're participating in.
Or how efficient you're being with your time too, I think.
Yeah.
Very good. Interesting. Very, very interesting. Now, I know we are quickly running out of time, which I hate. I feel like I could just keep bouncing questions off you all day. For people listening to it though, who've liked what you said and jived with it, where would you like to push people to, or where can people find you if they want to know more, or what would you tell people is the best thing to get involved with that you offer?
Sure. So I have a website. It's called tradersdevgroup.com. That's tradersdevgroup.com. TDG among friends. And you can just go over there and hit the Get Started for free. I offer a 30 video free Futures Fanatic Foundation course. You can download, the whole thing's free. I used to charge, I don't know, $300 for it. It's been free now for like 6 months. You can check that out. People like free stuff. Or if you wanted to look at the trade room, it's $10 for 10 days. But for people watching this, you can use the code SAVE10 and you don't even have to pay the $10. And by the way, that $10 doesn't auto renew or do anything like that. I only charge $10, which, by the way, I donate to kiva.org, which is a micro lending organization that I really believe in. It's not charity. You're actually providing small micro loans to people around the world to help them advance their lives and their careers. But what I found is free trials, people don't show up. They don't care. They don't potentially, it didn't cost them anything. So at least if they pay $10, which is $1 a day for two weeks. And again, there's no auto rebill or upsell or anything like that. But if you wanted that to be even free, you can go over to the website, hit try TDG and put in code SAVE10, and that'll even take off that $10. And then you can check out the room for 2 weeks, see if it's something that kind of makes sense for you. Again, our focus now is on the prop program. So everything we talk about is within the context of that. So if you are at a different place, or you firmly believe you want to take some of your own risk capital, 5-10 grand, you may not get as much out of it because we filter everything through that lens of these prop programs. But
very good.
You'll learn the trading strategies and things. But again, our risk budgets and stuff are allocated towards those programs.
Okay. Well, you guys have heard it here first. Special promotion to this podcast listener only.
$10 off.
You guys can get, so you can go to the website, save 10 for a free trial. You can also get the Futures Fanatic entry course as well. So very, very cool. And then obviously you have a YouTube channel, Futures Fanatic. If you would like to, you can go over there and just subscribe, throw some likes, show some love as well. It's been awesome sitting down with you, and I really appreciate it. I hope that maybe someday we can even redo this, sit down and dive into some deeper topics. We got some of the entry level stuff out of the way.
Yeah. What part of the world are you in?
I'm in Connecticut.
Oh, you're in Connecticcut. Okay.
Yeah. I've been up in the Northeast for a little while now.
That nice camera angle that you always have that shows that the weather looks nice there more often than it might actually be. I guess you close it in the winter, but yeah.
Yeah, no, actually, it almost looks better in the winter when
does
you
it?
get a lot of snow because there's
Okay.
like a winter wonderland on the trees. But yeah, during the fall, it's beautiful. Right now, everything is just lush and beautiful. And having, yeah, I've been in a lot of open or offices, and the
Yeah.
idea of having something that's like depth and some green in the background it's important to me. So I always try to make sure I have that set up right.
Cool. All right. Well, if you're ever out in Vegas or LA or whatever, just let me know. We have in Vegas, especially, we have a killer group of traders, like retail guys that no one will ever hear of. They don't do any education or anything like that, but they're kind of the real deal. It's a pretty impressive mastermind. We have one guy that trades like probably 1% to 2% of the S&P daily volume. One guy.
Oh my God.
Yeah. So,
wow.
and no one's ever going to hear about the guy, but we're all in Vegas a lot. So anyway,
Very
look us
interesting.
up. Yeah.
I definitely will. Let me sign off for everybody else right quick.
Yep.
But to everybody watching, just a big hello, whatever platform that you're on. Thanks for tuning in. This has been our talk with Futures Fanatic. Have a great rest of the day, everybody. Let's all hit the like button on the way out, or however you would show it love, depending on where you're listening. And I'll see you guys on the next one. Take care. Hey, thanks for watching to the very end. If you enjoyed this episode, there's a good chance you're going to love the other ones. So spend some time on the channel and make sure you show some love on the way out. Now, if you're struggling with your trading and you'd like my help, everything I'm involved with will be linked in the descriptions. Happy trading.